Good afternoon, everyone. Thank you for joining us for our webinar titled COVID-19 Implications for the ESG Agenda. This webinar is being held as part of our COVID-19 series of webinars launched by the Pearl Initiative as a response to the global pandemic. Before I proceed, apologies that I'm not on video. There's a few technical glitches and not allowed this today, but hopefully it'll be back to normal once the internet connection is sorted. Thankfully, all the panelists will be on video, so don't worry there. For those of you that aren't familiar with the Pearl Initiative, to give you a brief introduction, we are the region's leading non-profit business-led organisation commissioned to promote a corporate culture of accountability and transparency as a key driver of business competitiveness. In light of the not-so-recent public health pandemic, our knowledge-sharing events, including our seminars, workshops and roundtables, have been shifted to virtual webcasts. For those of you that have been following us, you'll see that you'll have been attending them, but you can have a look on our website. All of our past and upcoming events are loaded there, and our videos are available on YouTube for on-demand viewing after the webinar has been held. So in case you are unable to make some of our events, then please do check out our YouTube page. For today's panel discussion, we aim to address the immediate and long-term impact of COVID-19 on the environmental, social and governance agenda, and we'll discuss the steps businesses can take to map and address the associated risks. These three central factors are key in measuring the sustainability and societal impact of investment within a company. Businesses are moving at different paces to address ESG concerns in the core of a business processes, which is influenced by a number of factors, which includes the board's ESG knowledge, a focus on short-termism and the availability to track ESG factors. Social and governance factors in the post-COVID-19 scenario are becoming more critical in light of the immediate effects of the pandemic. The way in which an organisation handles this crisis will be a test and reflection of its governance practices and ethos as an organisation. With companies bringing immediate economic priorities into focus, this webinar will shed light on where it leads the ESG agenda for these very same companies. For today's session, I'd like to thank our panel of experts who've agreed to impart their knowledge and expertise in relation to the ESG topic. And I'll introduce my speakers for you now. Our first speaker today is Darren Revere. He's the founder and CEO of Sustainability Excellence and is an acknowledged regional and international leader in supporting companies, governments and investors in achieving sustainability leadership for the past 23 years. Darren has made a visible contribution to sustainability and has worked with the regional companies, government agency and non-profit to adopt sustainability strategies and reports in line with global reporting initiative standards. Darren is the founder of ESG Invest, an investor-focused independent division of sustainability excellence that aims to ensure international and national investors recognise the sustainability efforts of regional companies and increase their levels of investment as a result. Through ESG Invest, Darren also recently launched the Middle East Sustainable Investment Forum, bringing a globally recognised model for fostering investor sustainability awareness to the region. Darren also founded ArabSustainability.com, the world's first open and free data platform for sustainability performance. Darren has worked with more than 24 companies in the oil and gas, pipelines and energy generation sectors on their sustainability strategies, sustainability policies and sustainability reporting. Thank you, Darren, for joining us.
Did we lose Yasmin there?
Thanks. Our second speaker for the day, Erica Welch, is a partner and is the head of sustainability practice at YCP Solutions. YCP is a corporate strategy consulting firm with a focus on continental Asia from Dubai to Shanghai. YCP advises CEOs on make or break deals, how to optimize sales channels and define new business models, implementing digital transformation strategies and accelerating business growth. Erica manages relationships in Europe, Middle East and North Africa and brings over 13 years of strategy consulting experience with a focus on emerging markets in the Middle East and Asia Pacific regions, and heads a sustainability consulting practice globally. She works primarily with Fortune 500 companies and leading regional corporations in the Arab world and has led projects herself in KSA, UAE, Qatar, Oman, Jordan, Iran and Egypt and Algeria, and other Asian countries for clients across over 20 sectors. She holds a BSc from McGill University, Canada, and a postgraduate certificate in sustainability leadership from the University of Cambridge in the UK. Erica also completed her executive MBA at the Stanford Graduate School of Business in 2018. Once again, thank you, Erica. for participating in
Thanks.
today. Finally, our moderator for today's session, Anne-Marie Thompson, is the Managing Director of the Umbrella Institute, a UAE-based ESG and sustainability advisory firm. The Umbrella Institute is specialized in business behavior, triple bottom line transformation, ESG and sustainability reporting, and program development. Anne-Marie's passion lies in empowering leaders to take action with respect to their organizational triple bottom line impact and advocating the effects of the change to other business leaders. Anne-Marie is a serial entrepreneur who has worked in the areas of sustainability and corporate responsibility for over a decade. She's been involved in business transformation at an operational level as the general manager in a Middle Eastern construction company and an owner of a green storage facility in Denmark. Anne-Marie's strategy centres around the firm knowledge that companies who share openly and act responsibly drive greater engagement and ultimately have a more loyal customer base and sustainable income for the long term. Anne-Marie also believes that ESG represents a pivot in the way corporate communications is handled. ESG is disclosing intentions with ethical and moral implications, and as such introduces greater transparency and opens the company up to a new set of investors and stakeholders with a responsibility-focused portfolio. Finally, I'd just like to mention that as with all of our webinars and events, we like to encourage interactivity. Take advantage of our expert panel of speakers today, and you'll see there's a panel for you to ask questions, and it'll be directed to Anne-Marie, who will be asking our speakers for today, and Anne-Marie will also be participating, of course. So do take advantage, and hope you enjoy the session today. Thank you for joining, and take care. Handing over to Anne-Marie. Thank you, Anne-Marie.
Thank you very much, Yasmin. And thank you very much for letting us have this this opportunity to come and talk to you about a topic that's very important to the three panelists here, or the two panelists and myself. It's a topic that we could talk about, I think, for weeks without really emptying the topic. So we'll use this 1 hour to really dig deep, and with the audience's questions, they can guide us if they have any particular ones, and otherwise we have a few different things that we think are very interesting to talk about when it comes to ESG. And you are also very welcome to connect with us afterwards if you have any specific questions that you're not interested in sharing openly. And you can always come to us if there's questions. So I believe we'll start off this session talking about the current what is driving ESG in the region currently. And we'll give the word to Darren, first of all.
Sure. So thanks, first of all, very much to Pearl Initiative for having me and having us for this session. Looking forward to hearing the questions from the audience, and hopefully we can target those as much as possible. In terms of what's driving ESG in the region, I think we can look at this before the coronavirus pandemic and look at the effect of that. I think I know there was a warning there that the pandemic is potentially, well, it's a test for companies in terms of the seriousness to which they approach sustainability. But from my point of view, it's going to accelerate the agenda towards ESG, even if it's a bit bumpy along the way. So I think COVID is accelerating the ESG agenda. It's also creating its own agenda. But we can even look at the drivers that were pushing this forward prior to the pandemic. I think in general, what's been happening in the last 2 years in the market is there's really an acceleration of the belief by financial stakeholders that ESG is financially material and that companies that adopt sustainability outperform in the marketplace. And this is backed up by an increasing body of evidence. I mean, there's a clear positive correlation. What that means is simply that financial stakeholders wouldn't be doing their due diligence if they were not taking ESG into account in their investment to decision making or lending decision making. So it's really non-negotiable if it's financially material. So how is that playing out in terms of its effect on regional companies? First, international investors are asking a lot for this information. That's particularly so in the markets that got the upgrades, the foresee and MSCI upgrades. So Saudi, got those upgrades recently. Kuwait, UAE, and Qatar have had them for some time. Listed companies in these markets are now getting a lot of questions from international investors on ESG. And in fact, if you look at the companies that are investing in them, they tend to be companies that are signed up to international guidelines for integrating ESG in investing. So they're feeling this from international investors, and what the regional companies are, where they're standing right now is they're trying to understand, why are we being asked about this, and what do we need to provide? So this is kind of where they're at the moment. The same is happening on the credit rating agency side. So all the companies here have received credit ratings, and in the last 18 months, 2 years, all the credit rating agencies globally have increased the level of emphasis on ESG in their credit rating assessments. And so that affects the ability to borrow for regional companies. It affects the cost of borrowing. So this again is really, from a financial point of view, just really become essential. The same applies to banks. So banks are looking at these same risks and integrating into their lending. So these are some of the financial stakeholders globally that are drawing attention to this for regional companies. We also see sovereign wealth funds in the region actually driving a global agenda for sovereign wealth funds, where Abu Dhabi, Saudi, Kuwait, Qatar, all these sovereign wealth funds have signed they actually founded the One Planet Sovereign Wealth Fund framework, which acknowledges that climate change is financially material, and therefore they are taking it into account increasingly in their investment decision making, and expect the companies in which they invest also to manage climate risks. Another key financial stakeholder is the stock exchanges. So we see, from a stock exchange point of view, if sustainability helps their companies outperform, and if investors are looking for this, then stock markets are going to want to encourage sustainability in their marketplaces, or ESG in the marketplace. So we see a large number of the regional stock exchanges signing up to the Sustainable Stock Exchange Initiative. 7 regional exchanges, as part of those commitments, have issued voluntary disclosure guidance on ESG. So all of these are basically steps towards making ESG and sustainability just part of everyday business. So it really is the trend there. And there's other, and then of course regulators are looking at it for the same reasons. Now there's other drivers. There's mega events like the G20, Expo, World Cup. These countries want to put their best face forward, but ultimately, and those are also drivers in the market, but ultimately those financial drivers are all that is needed to keep this agenda moving forward.
And Erica, you work a lot with the more global markets and more Asian markets. Is it the same trends we see there?
Yeah, we see this globally. If we take a step back, I think the evolution has always had 2 stakeholders. The first stakeholder is the companies that are trying to be leaders in the space. And so you've got the Fortune 500 companies that have been doing this for decades now. And they're really building ESG or sustainability strategies into how they run their business for long-term longevity. And on the other side, what we see coming later on, and we've seen this in the region as well, I think companies and governments have adopted sustainability in the region first, and then investors have sort of come up behind. And that's what we're seeing now, institutional investors globally that have really upped their game, global private equity companies, firms, hedge funds, and the sovereign wealth funds, of course, as well. They've all started to adopt ESG as a de-risking tool. And this is primarily because, as Darren mentioned, MSCI, even the preliminary results from Q1 of this year, with COVID-19 sort of, wreaking havoc, we've seen that those that are ESG high performers are outperforming the rest of the market. And so both from a company point of view, as a CEO or a CFO, you're looking at what is it about these ESG metrics or these strategies that create more robust and resilient companies that can withstand shocks like COVID-19 or the oil price shock that we have a double whammy here in the region, or from the investor point of view of really looking at getting those financial returns. So I think we've seen that evolution globally. I would say the region is a little bit farther behind than other emerging markets like Asia, where I work much more in, but it's following the exact same trajectory.
Mm. And how is ESG, the ESG agenda overall being influenced by COVID? You've already touched upon it a little bit. Darren, you have some input?
Well, yeah, there's the short-term effects, which of course is just a lot of scrutiny in terms of how companies are responding. I mean, you've got your initial response, which is protect our people, protect our customers, maintain essential services. You know, if you cannot keep people on board, how do you help them retrain? How do you help them get other opportunities? Making sure income inequality and other social inequalities don't become worse in the context. So these are all some of the immediate things, and that's just the start of a long list. But I think that, you know, the next stage becomes solutions. How to be part of the solution, and that is where you know, you start looking at product and service innovation. You know, both from a survival perspective, if your business can't operate well in a COVID context, but also in terms of, you know, how are we going to go forward as a society in this situation? What can we do to be part of the solution? So I do see, you know, companies having gone from that first phase of protect to, you know, be part of the solution. And in terms of the wider agenda, you know, from my point of view, even if it's there hasn't been time yet to really absorb the lessons of this, especially for those that are really in a survival mode. I mean, the lesson is that we can't just have an economic system, obviously, that is not in tune with our ecology or social or and the health of society. And this is just showing that. And so I do expect that we would see a growing awareness of this at governance levels in companies, a growing emphasis for all actors in society to move towards more sustainable economies. And so that's just going to increase investment and innovation in some of the sectors that will contribute most to sustainable development, like education, like health, like you know, zero waste economy and renewable energy and care for the environment and managing climate change risks. So I think that this is ultimately going to be an accelerator for those, and you already see it accelerating the digital transition, all kinds of education, innovation and possibilities, health innovation. So you're seeing that, you know, that shift into more sectors more focused on sustainable development already happening.
So when we look at ESG, can ESG reporting or metrics be used in a corporate sense so that it's a way to see opportunity, a way to forecast something in the future, see where the company might have something that could be a concern later? Erica?
Yeah, if I can just take a step back with the COVID question first, and then I'll come back to this forward-looking or backward-looking issue. I think, as we said at the very beginning, COVID-19 will only accelerate ESG. And I think the challenge is that a lot of people see a lot of the changes we've seen in the region or globally, and they don't see it as a ESG response. They just see it as a COVID-19 response, but they're one and the same. And so to give a little bit of color, you know, COVID-19 has obviously hijacked the ESG to focus on S&G. And, you know, World Economic Forum at the end of 2019 put out a global risks report, which the top 5 risks the globe faced, according to the report, which of course was published before COVID-19, was what we see it as it is today, were all environmental issues. And so people were saying 2020, this is the year of the environment for the ESG movement. Now, clearly now it is the year of social and governance. And how that's playing out in the market are really basic things. Darren mentioned, you know, product and service innovation. For consumers like you and I in the Gulf, we notice this every day. Little tiny you know, changes that were made, including, for example, contactless payments. You know, contactless payments through your cards or Apple Pay or Samsung Pay, they usually had a limit of 100 dirhams or whatnot, and now that's risen to 200 or 500 dirhams, so you don't have to, affect the health and safety of the consumer or the people working around you. Other ways that has been employed is talabat and food delivery services offering contactless delivery. And from an investor point of view, it's been very interesting to see these metrics, as going to your point about backward-looking or forward-looking metrics. Health and safety, for example. This has been clearly an issue globally that has been at the forefront of, with COVID-19 and ESG and the implications of that. In the past, generally speaking, health and safety was most material, and still to some degree is, to heavy industry companies. So we're talking about oil and gas, heavy machineries, mining, chemicals, that sort of thing. When we look at very forward-looking investors now and companies, they're looking at a health and safety metric that goes beyond a sort of backward-looking metric like recorded deaths or fatalities or reported injuries. And now they're getting much more sophisticated. We're looking at things like the proximity index. So that is looking at how close do your employees work together in your industry, or how close is their human interaction. So all of a sudden, if you had an office of 3 people, or if you were in the food and beverage industry, restaurants, for example, there wasn't a heavy focus on health and safety besides for the consumer. There wasn't a whole lot for the employee. And now we're looking at the proximity index showing that airline industries, cruise industries, on a macro level, there are entire industries that we can give risk analysis to through an ESG lens. And I think that's much more forward-looking. So do I invest in growing this part of the business, and how do I invest in it? If you are in an industry that has high levels of, proximity and interactions between people, then it's about investing in the screens that we're seeing that divide, the bank teller, let's say, from the person in front of you. And that's been widespread throughout the restaurant industry. We've seen some of that popping up in Dubai as well, and across the Gulf region. So I think the ESG agenda hasn't changed with COVID-19, but the emphasis on S&G is very much coming to the forefront. And COVID-19 is changing the way that we view and analyze risk when it comes to our own companies, if we're CEOs and CFOs, or if you're lucky enough to have a chief sustainability officer at your organization. I think you're really evaluating very different risks. And if you're an investor, you're really changing how you're evaluating future investments.
Yeah. So we've sort of talked about this a little bit, but I think if we take it from another angle, there might be some of the audience who have heard about ESG, who know what it is, who want to start implementing it. How to start ESG practices if it hasn't been done yet? Erica?
Well, seeing as Darren's firm basically started that movement in the region, I think he'd probably be better at responding to this. But full disclosure, I did used to work for Darren, so I think I can give somewhat of an answer, seeing as we did used to work together for about 5 years or so. I think there's several steps that companies can take, and it depends. Obviously, they're quite similar if you're a company or an investor. First of all, if you're on this webinar, good for you. You're on the right track. You're on the right track. Educate yourself. Second of all, Cambridge has put out a survey every year for the last 20 years asking sustainability practitioners around the world what is their biggest issue to implementing ESG or sustainability, whichever you'd like to use. And the #1 issue has always been top leadership buy-in. You can have an excellent chief sustainability officer that is fighting tooth and nail and trying to implement the most sophisticated sustainability program within your organization. But if that sustainability officer isn't sitting at the table with the CEO and CFO when you're making critical decisions, like many companies are facing right now, if you're talking about furloughing your employees or facing issues when it comes to health and safety investment of your employees in the workforce in this climate, and your chief sustainability officer or your ESG manager isn't there, then there's a problem. And so the CEO, the CFO, they need to get educated. Ideally, they're completely backing a very strong ESG team that brings all these principles, and they're basically a project management office within the organization that's helping roll out these programs across the company. But you know, the beginning stages starts at data. And I think, you know, a lot of companies have gotten stuck there. I think a lot of, potentially a few companies that are on this call or watching this webinar in the future, in the region, there's been a focus on baseline data gathering. And that's great because you have to start there. But that is not the be all end all. That is the first step out of a 1,000-step journey. And once you get that baseline data and you start reporting it transparently year after year, the idea is really to move the needle on this and use that data to drive a holistic, strategic either investment thesis internally as a company, or if you're a sovereign wealth fund or a private equity firm or an institutional investor, looking at how ESG is implemented to grade a higher or lower risk score in order to make sound financial investments.
And if we move to Darren, it's very much the same question, but one of the global issues when it comes to reporting sustainability or ESG is that there are so many different key factors in this. How do we make reporting on ESG comparable and compatible to what is needed?
Okay, well, I guess this comes into the thousands of additional steps that Erica mentioned there. And so one thing is to make sure actually you don't get too embroiled in that, I would say. But the good news is, as you're saying, there's also a lot of good guidance out there. If we look at what's the driver in the region right now, it's the ESG requirements of investors. And so, you know, as a starting point, the stock exchanges have put out voluntary guidance that is meant to target that, and that is really a short list from the other global standards. So it makes it simpler. I mean, if I just want to report some things and I don't know where to start with that short list. But then, of course, there are a lot of global standards, as you mentioned, you know, and not to go into the pros and cons of each of them, but I mean, there's of course the GRI and the SASB, and those are both, you know, good guidance. I mean, SASB is generally considered to be more investor focused or financially focused. But I think that, you know, companies in the region now, at least the publicly listed ones, they're receiving ESG reports from a lot of ratings associations and so forth, rating agencies. And they're receiving their credit ratings reports, and these are a really good guide. You know, our ESG Invest division that was mentioned there at the beginning. I mean, we do a ESG report assessment for every listed company in the Gulf, and that it's sector specific. So it looks at the issues that are most relevant to a given sector, and that's also the same with these global ESG ratings that they receive. They're sector specific. So those give you a really good guide on what the key issues and indicators are for your sector. So that really helps boil it down to the things that matter most. And, you know, on this question of, you know, what do you do first? That's typically the first thing, is just pull together the assessments that you've already received and take a look at them and take a look at how you're scoring. And you know, the thing that, I mean, of course, we have to get companies to get to a much higher level of sophistication, but we also have to get them started in the first place. And what typically happens, how the conversation goes with companies in the region is, you put in front of them their ESG global ratings reports, and even if the CFO, like Erica was mentioning, or the CEO, they might not have ever seen these ESG ratings reports before, or they've just recently seen them. So this is new to them, and they'll look at it and they'll say, well, this is unfair because we do this, we do that, we do this, we do a lot of these things, but why are we getting scored so poorly on it? And it's because they haven't disclosed. So just by doing that quick high level of assessment without making it a big exercise, just pulling together the different assessment that's already being done externally and sharing that internally, it creates this awareness that we're being assessed. We didn't know we were being assessed. We thought we could fly under the radar till we were ready to be assessed. And we're being scored unfairly, which is actually meaning that if we're not disclosing, we are causing investors to undervalue our stock compared to our actual performance. So that kind of basic level of assessment allows one to see, okay, what are the key issues I should be focusing on in my sector? What can I already disclose? Where do I need to improve? And that improvement process then becomes a challenge. But then, the next step is disclose, because if you disclose, it tends to take on a life of its own. You create your sustainability framework, you start disclosing that way, you understand where your gaps and opportunities are, and it should take on a life of its own from there. First of all, your ESG scores will improve 50 to 100% right from the beginning. So this is enough incentive at this point in time for any publicly listed company or a company that has a credit rating score to take action. Nothing else would be required to take action. That's enough business case. But then you will want to focus on improvement. And since we're speaking about, Erica mentioned the emphasis has been on baselines and we don't see enough improvement. I can actually put some numbers behind that. I mentioned, like, we've done now 3 years of assessing all the Gulf companies. So the average score out of 100 has gone over 3 years from 17 to 20 for the region, overall ESG score. The average environment score has gone from 4 to 5 over 3 years. The average social score has gone from 9 to 12. And the average governance score from 39 to 44. Now, the governance score is so high because there's a lot of regulations already on what should be covered under governance disclosures. So you can see the effect of regulation on ESG scores in that picture, but you can also see the scores don't improve very much. It's a bit unfair to the companies that report. They do improve more than that, but this is just a reflection that with so little of the markets reporting, it's hard to move the needle on the overall numbers. The highest level of disclosure of listed companies in the region is under Dubai Financial Market, with about 15% disclosing. UAE, Qatar, and Bahrain all have about 10% disclosing. You have the best improvement rate now in Bahrain, and Saudi catching up fast because of these market upgrades and so much pressure on the companies there, and also to deliver on the national vision, which is a sustainable development plan, and will redirect investment into more sustainable sectors. So, and in comparison to the global, as you mentioned there, just one last set of statistics. If you look at something like the Dow Jones Sustainability Index, we currently have in the region 0 companies. 0%. There was one company, but it's now delisted on the Dow Jones Sustainability Index. In emerging markets, its average is 12% of listed companies, and in developed markets, 13%. If you look at MSCI's ESG index, in the Gulf, we have 22% of the listed companies, 22% of the qualifying companies in MSCI getting on the ESG index, compared to 33% in other emerging markets and 47% in developed markets. So we're behind, but we're catching up. And I believe we're in the deception phase. There is a whole lot of companies thinking about how are we going to address this growing demand from investors and credit rating agencies and banks and the sovereign wealth funds. And I do think it's going to translate into disclosure and then performance improvement over the next 2 years. So you might say there's not that many disclosing now, and acting on this we can wait. I think there's going to be some big surprises for those that wait, as far as the rest of the market moving quite quickly over the next 6 to 18 months.
And what about you? You meet the CEOs all the time, I imagine, who are a little bit afraid of this disclosure, like moving from not disclosing and then to disclosing. Do they come back and tell you it's a relief to have told this, and now we can see that there's an effect?
Yeah, actually, exactly that. I mean, why disclose if we don't have to? That's a general motto of a business that's worried about its competitiveness. You know, when you see that you are being assessed for this, and you are scoring 0 when you should be scoring 70 out of 100, and that is affecting your credit rating score and your cost of borrowing, or whether or not you make an ESG global prestigious index and trigger inward investment flows, the discussion is finished. You know, there is an immediate decision on the spot to start disclosing.
And what about, you also work a little on the side of the investors, of course. Do they understand why companies have such a fear of disclosing?
They understand. And they're what's the word? They're sensitive, like they're empathetic to it. And they're only asking for things that they think should be disclosed by all companies. And they might ask them privately and not publicly a lot more questions if they are interested in the investment that they would see as, you know, advantageous. Let's say for private companies, you know, advantageous information to know about an investment decision. So they're sensitive to the public versus private, and you can also, you know, share more information in the private context.
Yeah.
Yeah.
So
in terms of, sorry, just to add to that, Emery, in terms of investors, you definitely see ESG is forming under the risk teams. And risk teams, let's be honest, even with the big family houses here that have large investment arms, their risk teams aren't large, and they've really only been growing in the last 5 years. And so there are some pretty prominent names out there that you would expect to have a pretty strong investment team or a risk team that, you know, it's still its initial stages, 4 or 5 years. I think now we're getting to see these ESG teams complement these risk teams, and when they go out, they are often, you know, because these family offices are also not reporting themselves, they're asking for this information privately as part of that risk assessment. The other thing I wanted to mention was another key driver with some of the regional companies that are working with international companies here is that the international large companies are now requiring, whether it's a distributor or a vendor or supplier from the region, to comply to their own ESG criteria. So there, I think, you know, you've got that from the banks, you've got that from potential investors, you've got that from the stock market, you've got that from your own customers to some extent. We've kind of left them out of this conversation, but even millennial investors that are investing themselves either through the stock market or through consumerism, where they're saying, I would rather support this company's brand X over this other brand Y because I believe in the company's push towards this. And the more disclosure and transparency there is, there's more of that reputational brand building as well.
Yes. So one of the questions we can move on to is how we use all of this disclosure and information and all the communication that ESG has to move from a COVID rescue mode to a recovery mode. Erica?
Yeah, it's interesting because at the end of the day, yes, there is an ESG and a sustainability toolkit that will help build resiliency, but it's like a muscle. It's, you know, it's like putting someone on a diet after they've been eating horribly for years. It's going to take, you know, months and years, and that resiliency isn't built overnight. And so I think what we will see is those companies that have already built that resiliency, that have that ESG performance baked in, you will see a dramatic difference in their performance and their ability to come out of COVID, and they're probably already in recovery mode. Many of them, because the ESG lens allows them to see opportunities that maybe just an operational or commercial lens may not have given them, are already also digitally more advanced, tech-enabled. They're in industries already that have adopted the new innovations that have made them stand out and become leaders in their field. So I think those ones that are already strong in ESG performance, we're already seeing them come out of it. We're seeing them being very agile. I'll give an example. I mean, all of these companies, wherever they are on the journey, can improve. But for example, we saw Majid Al Futtaim and Carrefour, when they realized their e-groceries went through the roof through COVID-19, they needed really agile governance and tech-enabled systems in order for them to make some very swift decisions. And some of those decisions, they'll see them as completely commercial decisions, but they were also ESG decisions. For example, the furloughed entertainment employees from the rest of Majid Al Futtaim's portfolio were then asked to go move and work into the supermarkets. And they were using some of the supermarkets as fulfillment centers. To make those decisions and pivot so quickly, you do need to have some pretty sophisticated systems in place, which ESG would identify and you would be reporting on should they be reporting on and having ESG disclosure. So again, I think the trend will be strong companies and ESG will outperform, and they're already recovering, if not taking advantage of the situation and really thriving. The ones that have not implemented ESG, it will only accelerate it. And you can call it ESG or you can call it a COVID-19 wake-up call. It really doesn't matter. But ESG and sustainability will provide a framework for these companies to really analyze these decisions, whether it's employee welfare, an issue we haven't talked about, which is significantly impacting all of our clients, whether they are regional or globally, is supply chain risk. And that comes into play in ESG as well, not just in terms of, some people say, employee welfare of your supply chain or human rights abuses or issues. But obviously with COVID-19, there are fundamental systemic risks to having a very global supply chain, right? And so how do you address those issues? And one of the ways we've seen different issues come to the forefront amidst COVID-19 is, for example, food security in the UAE. The government has started to funnel a lot more money into this because they cannot rely on global supply chains to bring in 92% of the food that we eat in this country. That's not an exact data point. I think that's for seafood, but you get the point. And so as we see these issues come to the forefront, I'm not so sure that companies will say we've joined the sustainability or ESG bandwagon, but I think they'll say we really do need to take a much more holistic approach to analyzing these risks, and you're creating frameworks where we will make these decisions in a much more thoughtful and holistic way, where sort of we move away from that shareholder value as number one to stakeholder capitalism, where, last year at the BSR, I think Jeff Bezos and Tim Cook and a number of other CEOs signed on and said it's time for stakeholder capitalism to move forward, where we put customer obsession first, where we put employee welfare first, where we put it's not vendor and supplier relations, but it's actual true strategic partnerships where we're growing an entire ecosystem together and we're taking care of that ecosystem so that we can grow together and, in this case, recover out of a pandemic or an oil price crash, and come out stronger for it as a collective ecosystem of companies, not just a singular company that's after short-term shareholder increases for their own shareholders.
Darren, do you have anything to add about this recovery? Yeah, sorry.
Yeah, sure. I mean, speaking of this ecosystem, there's also the regulatory side of this ecosystem and what governments are doing. We talk about the business case for sustainability, and this business case exists already as it is. Despite all the headwinds of some of the built-in, rules and the way the system has built up that doesn't support sustainability. It actually supports the opposite. I mean, we're trying to do a transformation of our economic model towards sustainability. So, you know, you're fighting headwinds and still you're starting to get a winning business case. But that can be accelerated now. And, you know, we're seeing a period of time where unprecedented like stimulus is being put into economies to try to figure out how to deal with the COVID situation and the effects on economies and societies and inequality and so forth. And so there has been a lot of talk about, for example, you know, investing, targeting the stimulus towards a green recovery. And which is to say, again, how do we do these stimulus in a way that doesn't, let's say, reinforce and keep going? I mean, the immediate reaction is reinforce and keep going whatever was working before in order to minimize the short-term impact. But really, and this is a very difficult thing to do in the middle of a pandemic, but really what you want to be doing is saying, is this an opportunity to shift in the direction we've been wanting to shift and put a little bit of extra acceleration into that? And the good news is, you know, that in play, if you have been thinking about this, and the UAE has been thinking about this, Saudi has their Vision 2030. I mean, these are some countries with some clear visions and plans for how they're going to shift their societies and their economies towards sustainable development. So it's a great opportunity to try to drive that stimulus and those efforts in that direction. So I do think, you know, the regulators and the governments have a role to play in helping accelerate this shift. I do think, you know, the regulatory environment has to set some kind of vision or goalpost for where we're heading in terms of sustainability, so that the markets get a clear signal and they know, you know, what they should be investing in and innovating in. And if we just take the environmental side, you know, one of the things would be, you know, there just has to be clear recognition that we're heading towards a low carbon, you know, zero carbon, even take carbon, sequester carbon back out of the atmosphere economy. You know, we just have to work towards that. We're moving towards a circular economy where ultimately there's no waste in the economy. And again, we work towards regenerative, you know, where we're replenishing nature through, you know, how society and economies operate. So I do think that governments can use this chance to double down on those agendas and their visions and to set some of these longer term goalposts and redirect investment in that way. And one last thing on this front is, again, just insisting on disclosure, you know, setting a minimum level of ESG disclosure. You don't have to have good performance, but you should disclose what your performance is. The same goes on the investor side. Investors don't have to have a great ESG investment strategy, but they have to disclose whether they have one or not and what it is. And that just has the effect of shifting the market. We can see the governance scores versus E and S and how much difference it made on those scores based on, you know, what the requirements are. I think companies have had a lot of time to think about this. The stock exchanges have put out voluntary guidance. I think it's, you know, time that we would start seeing that occur. And this is all just part of, you know, Erica's saying maybe companies won't see this as ESG. This is all about making sustainable development business as usual, making markets sustainable as the normal course of economies. And so these are the kinds of things we can do to move it into that direction at this particular point in time. So there is an opportunity that presented itself, challenging as it might be.
And so we've seen other crises before. For instance, in Denmark and Scandinavia in the 80s, we had an oil and gas crisis, and that meant that we now have a very good energy, like windmill and water energy. Will this crisis bring new innovations in this sort, especially in the Middle East? Will we see changes that we can see in a decade will really change the economy here? Erica, what do you think?
I think the short answer to that is yes. I think we'll also see a little bit of destruction, and that's okay. It may not be okay for everyone, but I think if people and companies really start thinking about this long term, then this innovation cycle, it has to happen anyway. So you can say COVID-19 killed it for an organization in the next year or two, but the reality is that it was just accelerated. And you can see that case in point, for example, in the oil and gas industry. regionally, there's been less talk about this, but of course it's been a major oil crisis, but we haven't seen a lot coming out of, Saudi Aramco or ADNOC, for example, on their response to this, besides the business as usual, I would say. But globally, we are finally seeing the big four oil majors come out with dramatically different plans of what their organization is going to look like in a few years. And so the CEO of BP came out in March or April and announced, alongside job cuts, essentially all new job offers being sent out would be towards their net carbon neutral vision for 2050. And so this idea of them, of BP truly becoming a new energy company, even playing in places they've never played before, such as utilities. And Shell's CEO said the same thing in June. And so alongside many cuts, it was a redirection of focus towards digitization, which all of the oil majors have been focusing on over the last few years, but dramatically changing their business from an oil and gas company to a new energy company where they're investing billions of dollars in new energies, but also facing direct to consumer as well, which is a very, very different business from a predominantly upstream and midstream chemicals player to, moving down into the downstream and then utilities direct to consumer. I think will be a very interesting innovation and transformation to watch. And I think that is happening at the global scale at amongst Fortune 500 companies. We will see that on a smaller scale here in the region as well, where companies will have to pivot. And again, the most agile, the ones with the strongest governance system, the strongest leadership, and a more holistic view of their business will be the ones that not only survive, but thrive going forwards.
What do you say, Darren? We have a lot of family-owned businesses in the Middle East and a lot of families with a lot of long culture of doing the same thing. Are they starting to change and pivot and think differently? That's a hard question.
I guess there's no straight answer. I would say some are, and some absolutely are not.
Darren, while you think of that,
yeah.
While you think of that, I can give just two examples. So I've seen a couple of family offices now looking more at, de-risking their regional presence by expanding into other markets. So that's one way, but we thought that companies should have been doing that 5, 6, 7 years ago. And there were some family offices that had already started 5, 6, 7 years ago, but we're really only seeing that focus, really compounded now. And that's with this oil price crisis, as well as COVID. Companies are realizing that if they just have a regional footprint, it's not enough to sustain the business. They do need more of a global footprint to sustain their business and grow it dramatically, because every region will go through its own geopolitical risks and macroeconomic challenges. So we have seen an increase of these family offices. Both their investment arm and their businesses themselves look to other markets, whether that's Southeast Asia or Africa predominantly. And that's our bread and butter business, so we do have a view on that. But in terms of ESG adoption, I would say most of the investment arms of the family offices we've seen just adopt risk teams in the last few years. So for them to adopt ESG, I think they're still a little bit behind.
Yeah, I think.
So we have. Okay, go ahead. Go ahead.
Just on that, I mean, I think that the ones that are in a safe kind of place from a monopolistic point of view and that kind of thing, they tend to be the slower moving ones. But then you have like the rentier ones. But then you have the ones that are more investment focused, and they just look at sustainability and they see the biggest investment opportunity maybe that they've ever seen. And so they're starting to, invest in renewables, clean tech, education tech, health tech, digital, artificial intelligence, these kinds of things, right? So again, it's a bit of a mixed bag. It depends on the culture and nature of the organization. And then in the region, I do think we're seeing at least in some of the Gulf countries, we're seeing a doubling down on their national visions, which are sustainable development plans, and they tend to be focused on economic diversification. So the diversification works a little bit different. You have your big companies that are going to continue to be the cash generators in the short term. But since many of them are government owned, they start setting up other companies and whole, let's say, even investment parks and this kind of thing to focus on becoming, the global leader in certain fields. So I do see them, executing their strategy from that perspective, which is going to ultimately, have an effect on the economies here. So I do see, from a positive point of view, doubling down on these sustainable development strategies as opposed to going into too much of a protective mode. Again, it's a mixed bag, but on the whole, an optimistic outlook for, the necessity. It's a necessity, and it goes to the family businesses too. It's ultimately a necessity of changing, either being in the front and doing really well from it, or getting bruised a bit and trying to find a way when it's getting a bit late in the game. But one way or the other, progress is being made, and most of it's quite positive.
So we have a question. Sorry, go ahead.
No, I'm just saying to take the optimistic view of things.
Yeah, I think that's a good strategy these days. We have a question from one of the audience who's asking how to embed the ESG agenda in the overall business strategy to attract more investments. And I think we've touched upon this a little bit, but I think maybe if there's like a few key notes that people can take away. Darren?
Well, I would go and look at what are these sector-specific risks. Look at the ESG reports that are being made for your company, and look at these sector-specific risks. As an example, banking sector. You might think I'm doing great as a bank. Good community reputation, all these kinds of things. You go and check your ESG assessment, and it said, the top two things are extent to which the bank integrates environmental, social, and governance issues in its lending procedures, and extent to which the bank offers, products and services that emphasize, that take into account environment, social, governance in the investment decision making or in the product design and nature and how you sell it in the market. And the banks say, well, okay, they score 0 out of 100 on those categories. And yet those are the most important issues for the sector. So I think the main message is that ESG is core to business. Whatever sector or service or product you're offering, there's going to be major changes to it as a result of these sustainability trends and goalposts we mentioned. It's your job to understand what those potential changes could be and what risk appetite you're willing to take in terms of A, just holding off on changes, or B, taking advantage of the opportunity to move into that space through investments, through product and service innovation, through capturing that market and being recognized as a leader and so forth. So I would say start with the sector analysis for your sector, because those will help tell you what are the most critical things in your sector, and those will touch directly on your core business.
I think very good. There is one other question. If companies are just beginning to formalize their ESG framework, what would be your 5 top tips, first steps? And this is especially for retail sector. You want to try, Erica?
We were talking about retail earlier.
Yeah, wow, retail. Well, let's keep it general for everyone as well. I would say, going back to my days working with Darren and doing these data collection and sustainability reporting, it really comes down to, like Darren said, the sector supplements. So there's a lot of resources out there looking at the GRI, looking at what you could disclose, looking at what you would be comfortable with. And then there are very specific ones for banking or retail or telecom, et cetera. So look at those and identify how much of that you've actually, the data that you actually have, and try and get an idea of that. That's first, but don't get too lost in the weeds. Second is the strategic top-down approach or holistic approach, where you really look at your stakeholders. So who are your key stakeholders, and Of course, they're all important to us, but some are more important to us than others. And from an ESG lens, of course, shareholders are there, but we're really focusing on our customers. We're focusing on our employees. We're focusing on our strategic partnerships, our vendors, our suppliers, and our entire value chain. So look at that and really understand, how do we have an operational relationship with these people and these companies, and how do we better those relationships? And from an ESG lens, what are they doing that we could adopt, and vice versa? So that's second, making sure that you have a stakeholder map and you really understand how you're interacting with them. Are you disclosing to them? First of all, before you're disclosing to the public, are you actually having a two-way dialogue with your key stakeholders? And then the third is really identifying the material issues to each of your stakeholders, but also to your organization. And so for the retail industry, again, I'll bring up some new metrics that you guys would probably be dealing with. So health and safety of employees is paramount. Of course, health and safety and communicating the health and safety of your customers is paramount. And that comes with it, this proximity index and your different retail outlets or brands that you own. Coming back to the stakeholder issue, for example, if you are in retail and you have major fashion brands under you, such as Burberry, for example, or you can name a bunch of the big fashion houses, they are all adopting ESG into how they are rolling out across the world, and how they're selecting their partners as well, and how they're pushing their partners to adopt these issues as well. So starting those dialogues internally with your key stakeholders, and then doing your homework around what metrics are there, I think this will get you on that path. And as Darren said, really, really early on, just disclose whatever it is, even if it's something that, compared to some of your peers might look sad and not as extensive. Start on that process, because as soon as you start, you can, that it does take a life of its own, and the momentum will gain, and it gets you that exposure at the top leadership levels to move things forward. Darren, I don't know if you have anything to add to that. I'm sure you do.
You did that.
That's great.
Good
So I
starting
think we're coming to the end of this session, and it's been broad, and it's been good, and it's been deep in different ways. I think we can reiterate that people can contact you if they have specific questions, and that a lot of research is good when it comes to ESG, looking at what industry you're in, what not best practices, but what other competitors and similar companies are doing, and just being open and smart and rethinking everything. Yeah, you have any last comments? It's been very nice.
Wish everyone on the call good luck. I know these are challenging times, but sometimes looking at the same problem through a different lens, like an ESG lens, is quite exhilarating. It's quite exciting. It opens up new ways of thinking, and there are always solutions to the problems in front of us. So I think it's just another tool in your arsenal, and I encourage you guys to go forward and learn more about it. And feel free to reach out to Darren or myself. You can find us on LinkedIn, or I'm not sure if our emails were out there earlier, but feel free to reach out, and we'll be happy to chat.
Absolutely, yeah. Just stay positive, because there's a lot of possibility here to make a better world as a result of the difficulty we're going through now.
Yeah. Thank you very much for attending. I think Ms. Yasmin is not here, so we'll just say goodbye from us three. And thank you very much for listening to us for an hour.
Thanks, everyone.
Thank you. Bye.